Joining us right now to talk more about all of that is Paul Christopher. He's Wells Fargo Investment Institute, head of global market strategy. Just the guy we want to talk to on a day that the market was down 800 points yesterday. Paul, what do you think went on?
Well, the market is still concerned about growth, and it doesn't help that you have this miscommunication between the U.S. and Chinese over tariffs. As to the yield curve, yeah, that's important, but we are so flat right now that it doesn't take much of a fillip to produce an inversion like that. It was in the belly of the curve. We think you need to focus more on 10s to 2s and 10s to 1s especially, and an inversion to be significant for the economy has to be sustained. 4, 5, 6 weeks in the past has been what it's taken.
What about equities?
Equities really is still trying to sort out growth. And yeah, you're going to have a slowdown in growth, but that's what happens after the 5-hour energy drink that is tax reform.
That's what I was thinking. This market is now digesting, trying to understand what a real slowdown from 3.5% growth is going to look like. We know profits were up 29% year over year this last quarter. They're going to be up 8% next year. That's a big drop. This market has to get comfortable with this decline in growth.
Well, it's certainly trying to recalibrate its risk, especially because we are going off of accommodated policies, right? And one of the problems that the market was looking at was compressed operating margins coming from the companies because of rising input costs. 1, labor, 2, cost of capital, right, going up. And now we're seeing the cost of capital start to come down as this market thinks there's going to be deceleration in earnings. But what's pretty interesting is I looked at one of the notes from Wells Fargo, and they're anticipating 3079 next year on the S&P 500, which is pretty significant higher from here at the end of 2019. I think it was Chris Harvey or
yeah, Chris Harvey, a different part of the firm, and our view is a little bit more cautious. Okay. We're looking for 2960, 2910 okay. in that area. But yeah, I mean, we think stock prices will be higher. We think you could have a new all-time high on the S&P next year. That's quite possible. And yeah, earnings are going to slow, but we think still 10% earnings growth is pretty solid
next year.
Next year.
Yeah, but the estimates on earnings growth have been coming down. What they're below 8%. They in the last quarter, didn't they come down in terms of what analysts are expecting on overall earnings growth last year?
Our work
that
shows
was some of the
analysts actually, after the third quarter was better than expected, the analysts' revisions were a little bit higher, a little bit better for next year. So we'll take that with a grain of salt. Maybe they're still being influenced by the third quarter, but this is still pretty decent earnings growth. Bob, you and I were talking before earlier that things look pretty good still from a corporate perspective.
Yeah. What do you think is going to happen with public equity versus private equity? We were talking about, there's tons of cash parked over there in private. We're seeing a lot of people fly to private. We're seeing disinvestment for investment. People are carving off pieces to go private. What's your view on that going forward in 19?
Yeah, we still like private equity here. It seems like a place where you can go to avoid some of the political turmoil that roils these markets from time to time.
Let me ask you about the auto sector. GM CEO Mary Barra heading to Capitol Hill today. She's going to talk about how companies' recent cutbacks. Secretary Mnuchin weighed in on these job losses that are coming from GM. Watch this.
My understanding is that GM has to just kind of restructure some of their demand. What we're seeing, particularly with lower gas prices, is additional demand for SUV, light trucks, strong demand, less demand for the small passenger vehicle. I think, as you know, in the manufacturing process of autos, they got to retool factories. I'm not aware of the exact specifics, but I hope that GM can retool these plants for other factories and that they can move things around. And I think one of the big focuses of the industry is how can they use new technology so that they can retool these plants a lot quicker, and whether things like 3D printing for tools and things like that, whether 5 or 10 years from now we can have that as a big part of auto manufacturing. I know we're very focused on technology.
This comes as a number of top executives from German automakers like Volkswagen, BMW, Daimler prepare for a meeting at the White House today. They are trying to avert President Trump's auto tariffs. Bob, walk us through this retooling that Mnuchin is talking about and what you see happening as a result of tariffs in the auto sector.
Yeah, I don't think Mary has a choice. The consumer dictates what cars are going to be produced. They don't want the small sedans. With gas prices where they are, with 20-some states below $2, people are going to continue to buy SUVs. They're going to buy trucks. She has no choice other than she's going to have to put huge discounts on these cars to keep them going. Point number one. Point number two, I was down in the Permian last week, and in the Permian, they're going to produce as much oil they're projecting next year over 7 million barrels a day that will rival what's coming out of Saudi Arabia.
Wow.
So I don't see gas prices going down, Maria, in the short term. So the only thing she's going to be able to do is to try to repurpose those plants to get the jobs back.
And her costs went up $700 million a year, at least because of the steel tariffs.
Yes.
So, again, your costs go up that much, you're a public company, you got to offset it.
But some of that, too, Dagan, don't forget, they've devalued 7%. So the impact on the imports of steel is not the full impact that we hear about. Now,
just an additional pressure.
It's a little bit of pressure. Most of the CEOs said they can handle 10%. They'll get about 2.7 to 3.4 in price. And a lot of pressure on the supply side.
Are there areas of this market you would buy right now, Paul, real quick?
Yes, we like the cyclicals still, and we just went overweight tech.
You went overweight technology, including those high flyers like parent of Google. And
13% expected earnings next year.
Good number.
A good price after the pullback.
Paul, good to see you.
Thank you.
Thanks so much. Paul Christopher, Wells Fargo.